Good morning, it's Jeffrey Cohen. Stock market action you can use May 16. I'm a registered investment advisor with U.S. Advanced Computing Infrastructures. We run quantitative models. We check out the entire stock market, all the stocks that make a profit, all the stocks that lose a profit or that don't make a profit. We track the markets. We have our own money invested. We do not invest your money, but we run models for you so that you can better invest your own money. Who knows, maybe in the future we'll start running money too. So a couple things I want to talk about. The first is S&P 500 is right around 4,000. And so what happens is this is a level where we've had some stickiness. Some people might call it support, others might call it resistance, but what I see is this 4,000 level is where we were a year ago, more than a year ago to a year ago. So we're kind of bouncing around this level. Last night, Goldman Sachs came out, as did Morgan Stanley. So those are some of the two largest money managers by market cap. It's Morgan Stanley, Charles Schwab, Blackstone, and Goldman Sachs. And so they both came down and said like 3,600 is kind of where we're heading if we're heading into a recession. 3,600, that's 10% drop. That's not depression. That's not even correction at this point. That's just another 10%. That's actually not that big of a deal. I have stocks that fall 10% in a day. And so I just want you to think about there's still more movement. There's still more room for this market to go up, to go down. And I want to share some of the news and a poem that we wrote on Twitter. So the big news is we rebalanced our current efficient portfolio. Fewer stocks required, larger edge. So if you like betting on momentum, if you like betting on lower risk, higher returns. Lower risk meaning lower historical volatility of the stocks moving together. Higher return means although the market is guaranteeing a lower return right now because it's fallen and it's just not a good market right now, but you can kind of tweak out a little more expected return looking forward. So backwards you have more volatility, backwards you have lower return, but moving forward, if you tweak it, less risk, slightly more return. Both of our currently efficient portfolios, the 11 stock one and the 7 stock one, depends on what kind of stocks you like. It depends on can you handle 11 stocks versus 7. Both have a 20% larger edge than last week. So what this tells me is it's starting to be time to think about putting some money to work on the long side. But I would say we are not out of the woods yet. So a couple other things that we posted a poem. The futures are down, the markets look red, the VIX is up, fear ahead. Oil trades near the highs, gasoline too much. U.S. Treasuries are Starsky, corporate bonds are Hutch. Do we profit on stonks? Do we buy more puts? My friends say buy memes. I say give only looks. So our context in this market is still to look, but not to buy. And so what was on top of my feed for Twitter this morning? Lisa Abramowitz. If the S&P 500's decline breaks through 3850, which is 3%, which is a bad day, we think the equity market will be telling us it's starting to price in a recession. If that happens, the key number to keep in mind is 3,200. So that's interesting because 3,200 gets us to where we were in July of 2020, September of 2020, and end of October 2020. So she's picked a new support level. So Goldman Sachs and Morgan Stanley picked a support level here, December of 2020. So what's interesting is these guys are all like reading tea leaves. I don't read tea leaves. That's not what we do. I don't know whether the market's going to fall or go up. Honestly, I don't know. That's not what we do. But what we would say is if the market bounces, we've got stocks that are going to scream higher. And we have stocks that you should stay away from that are dogs, that are high risk, low expected return. And why would you want those stocks, right? So a couple other things we talked about last week that I also saw in this week's model. The variance on negative profit stocks is higher than the variance on profitable stocks. So the market is punishing negative net income stocks. Well, that makes sense. The expected return on negative net income stocks is higher because they've already gone down. Okay, that makes sense too. So let's take a look at some things. So I like FinViz. I know you guys like FinViz. If you watch the show, you know FinViz is awesome because it really does help to visualize what you're looking at. So major news: the Carlyle Group up 6%. So our model loves the Carlyle Group. So if you haven't been watching, it's your first time, just loves it. It's a relatively small cap money manager. Loves it. Now you can't really buy Bridgewater stock because they're privately held, Ray Dalio and company. But the Carlyle Group, number 2, why not? They're kind of second to the feather there. Why not grab it, right? And so it pays a dividend. It's a nice company there. But there's some other things that I thought were important. The first is breadth, market breadth. So on Friday, 25 new highs, 352 new lows. Okay, 7%, 93%. How many stocks are above the 50-day moving average? 14%. How many stocks are above the 200-day moving average? 18%. This is tough. Not a lot of breadth in the market. You basically have to be super lucky. If we look at the full market, all stocks, and we look at it over a month, how we doing? We're all red. So a month ago, if you would have gotten out, you would have saved all this money. That was where we were a month ago. Where were we a year ago? Okay. A year ago, it's a mixed bag, right? Apple, Tesla still up. Energy, done great. Consumer defensive, you would have got in early. Consumer defensives did well. Tech is a mixed bag. All financial services a mixed bag. All healthcare is a mixed bag. Although the drug stocks are up. So, this is a year ago, right? Who knew? Just something to think about as you're in the market, right? If we look at the world, a day ago, the world looked great. Friday, the markets were green, green, green. So you would think you go into Monday, all this great news on Friday would cascade into Monday. Well, this is why I read the poem. Because it looked like futures were down. So, Jeffrey, is the market going to go up or down today? I'm not sure. What do the futures say? Well, that I do know. Let's start with crypto. Because crypto trades 24/7. So, first thing I see is that the dollar versus euro, the dollar looks good. 104.30 against the euro tells me dollar strong. Now, it broke below 103. It was 103.89 last night. And so what that tells me is the U.S. dollar continues to test new highs. Money is flowing to the U.S. The U.S. is your safe haven, right? Look out below. Market loves the dollar. When the market loves the dollar, it does not like risk assets. It is running away from risk. Bitcoin at 29.8. You look at that chart. You know, they talk about support levels. Well, this is way below the support level of 35,000 over the past year. You got a whole new support level at 30,000. So what I would say is if Bitcoin stays around 30,000, it could continue to stay around 30,000. If Bitcoin falls significantly below 30,000, like it did, what is that? May 12th. You know, you could be in trouble. But for right now, it's fine. It is holding its own, okay? Let's look at the futures. Where are we today, Jeffrey? Well, good news is my poem didn't play out. Dow Jones Industrial Average, S&P 500, NASDAQ, and the Russell are all supposed to open slightly higher. Does it make sense? The VIX is down. Well, that's great for stocks, right? Because we're actually starting to get to the level of the VIX that's more moderate. We're under 30. That's great. Less risk, less fear. That's good. Crude is so high at 110. I don't care that it's down a half a point. Crude oil is at $110, or is at $110 a barrel, and gasoline is at $4. Guys, gasoline's at $4. You know, winter's coming. Natural gas is at $8. We have a massive energy crisis on our hands. Ask anyone that lives paycheck to paycheck, and they'll tell you more of their paycheck is going towards energy, and they don't like it. So let's take a look at interest rates. Interest rates were higher. I've got some pages lined up to talk about interest rates. And then we look at some of the bellwethers. So silver's up 20 cents, up 1%. All right, that's good for the market generally. Copper's up slightly. So when I look at this market, I think it's okay. It's a setup. It's a reasonable setup for a good opening on Monday. Okay. So the market is poised to enter slightly higher on Monday. Feeling okay about that. So, first news article I read this morning, and it's a paywall. Gloomy Goldman offers 20 safety stocks. So Goldman is trying to position its retail investors, or people that are just hangers-on, that don't pay for research, that says it's time to maybe tuck some money away for safety stocks. It's interesting. That's a bear sign. If I look at FinViz's news, I don't know that I see news. I don't see any news yet. I'm not there. There's no news. Market's slightly higher on the futures. Good enough for me right now, right? So let's take a look at some of these other pages I set up for you. I have a lot of pages. Well, the first thing I want to show you, this is just interesting. This is Inside Baseball. So our website is not a very fancy, popular website, but I will tell you, negative beta stocks seems to be the hot topic on our website. Negative beta, Jeff, what's a negative beta stock, right? So I'm going to walk you over to the negative beta stock page, how to find it. You go to the main web page. You go to the menu, you go to stock, bond, option, investing, FAQs, and you look at, what are my negative beta stocks? And we updated this morning. These are stocks which move opposite to the S&P 500. In general, all things being equal, these have moved opposite to the S&P 500 for the past year. Chesapeake Utilities Corp., IHS Holdings, Kellogg, cereal company, and PCOM, Points.com. That's a new stock. We haven't seen that one before. On the companies that lose money, you see BKEP, Blue Knight Energy Partners, and FATH. FATH is a meme stock. And then you got some of the synthetics here, or ETFs, or just made up stuff, right? If you wanted to have some physical gold, but you're afraid of having a gold bar under your bed, by the way, it's not a very safe place for it. I have cats, they play with the gold bars. Next thing you know, they stuck it down a mouse hole, now you can't find your gold bar. So you can hold physical gold in an ETF with a 7% negative beta. And then there's your Pro Short QQQ, which delivers a 4 times negative beta. You got the Invesco US dollar index. Remember how I told you the dollar was, when the dollar goes up, stocks go down, and when stocks go up, it usually is that the dollar goes down? Well, there's a 10% negative correlation for the US dollar to stocks for the S&P 500. And then lastly, if you want to bet for or against the VIX, which is that fear index, there's a -4 and a -6, depending on how leveraged you want to go with your VIX bets. Now, VIX is not a way to bet against the stock market directly. It is fear. You're betting against fear. You want to bet against the market, there's a short QQQ right there. You bet all day long. And by the way, if you want to bet for the market, let's say you're just a fan and you really like the market and you want to bet that the market's going up, TNA isn't bad. TNA is the Direction Daily Small Cap Bull 3x shares. This is a bet that is with the market. So if you want to bet with the market, there you go. And then they have a whole bunch of different ETFs as well. So I'm going to leave that up. We're gonna do a little post-game wrap-up on the video and update the description. So what else can I show you? So there are a whole bunch of things. So well, first off, Cannabis, looking up this morning, I sent a tweet last night asking whether it was a head fake. Friday it traded 5 million shares, which is 5 times or 4.8 times the daily average. So who knows? Maybe it goes up, maybe it doesn't. Nobody knows, right? My guess is Cannabis hits 20 cents today, and it's starting to get to the point where we start putting some real money back to work, but not yet. Fallon says markets are making fresh attempts to swing lows. And what Fallon said, which is interesting, is he likes the Russell 2000. If you're going to put money to work, put it to work in small caps. Thought that was interesting. That's political. We don't want to talk about it. This is the Goldman article. Goldman, if we hit a recession, it goes down to 3,600. That's only down 10%. Morgan Stanley, $3,400. Morgan Stanley's calling 3,400. That's a 15% drop. So these guys are, I know that's paid for research, so they're not bullish. China, terrible economy on Sunday. Retail sales down 11%. Industrial production down 3%. Unemployment rate in the cities is high in China. 6.7% of the workforce can't find a job. Come on. China's the place where everybody works. And the salaries are low, which is why they're exporting stuff all over the world. They work. They're really productive. It's a good economy. Not today, it isn't. So you're betting against a good economy right here. And here's a paywall. China's economy contracts sharply, right? So when you look at the market today and you think, oh, Jeff, I think the market's going up. I think we're fine. Forget the U.S. for a minute. China's down. The Nikkei dropped. Oh, look at that. Russell, NASDAQ, S&P down for the open. Just while we're talking. It's so funny, right? So this is interesting, right? David Goldman, not of Goldman Sachs. The American economy is super weird right now. But there's 4 things that matter, right? This is for regular folks like us. Okay? Number 1, the Fed is raising interest rates and will be tightening. That's not good for stocks. The stock market is in a sell everything mode. People are depressed. The stocks are down. Even my mother, who's 87, is down. I'm making poems about the market being down. Number 3, the bond market is down. The bond market's doing terrible. I got some pages to show you. God, I'm in bonds. I'm starving to death here. I can't even afford dinner out with my wife. I got to eat home. I'm serious about that. I ate goat cheese at home because it was too expensive at the store, at the restaurant. Chaos around the globe. Well, that's always true, but today seems a little more true. So what to do? Oh boy. He's got some ideas. I actually liked his ideas. David Goldman from CNN Business. Bond benchmarks. Wall Street Journal. I used to show this all the time. How are bonds doing, Jeffrey? So I want to show you. This is important that you see this. No, you know what? I like it that way. It's better. We're just going to look at total return, year-to-date total return. Broad market indices down 10%. Corporates down about 15%. High yield down about 10%. U.S. agency bonds down about 10%. Depends on the duration. Longer bonds are down more. Mortgage-backed securities, which tend to have a limited duration or length because people pay back the mortgages. They're not forced to have 30 years, right? Those are down 8%. Mortgage-backed Ginnie Maes, Fannie Maes, down 8%. So, U.S. corporate debt, a different benchmark, is also down about 15%. No place to hide. What's interesting is the S&P 500 is down 20%. Fixed income's down 10 to 15%, depending on where you're hiding. Now let's take a look at the bond indices. So that's important because this whole thing about stocks versus bonds, we kind of have to be in both of them. And unfortunately, at this point, there's nowhere to hide. They're both down. Now, let's tie back to the U.S. dollar being strong. So the dollar's strong, inflation's high, everyone's running for the exits. Where are they running? A lot of them are running into treasuries. And so you see the treasury yield curve. That's what this is. This is as of Friday close. Source of this data is FINRA. FINRA is the entity that manages us as an investment advisor. They're a quasi-government private entity funded by the financial service industry. Look at that, guys. AMC bonds are yielding 21.5%, baby, on a 10-year coupon. Under 70, trading under 70. AMC is trading under 70 in the bonds. It's interesting. I just went to the movies. It was nice, right? Movies were full. We saw Doctor Strange. It was an awesome movie, by the way. So, where are we at with the bond yields? This is where it gets interesting. I'm going to make our logo bigger so you know. Chicago Quantum, are you ready? Are you ready? When the stock market goes up, do you have the stocks that you need to be in every day, every week, to make massive outside indices rises with lower interest rates? I'm ready. I'm going to be putting a lot of money to work. You're going to see. I'm going to be able to go out for dinner. So, yield curve is trending higher. It's up to 3.1% on the 30. It's slightly below on the 10-year, slightly below 3. 5-year, also slightly below 3, and then it kind of tapers down. What's interesting is the 1 month is at 0.67 and the 3 month is at 1.03. That's interesting to me. So let's take a look at market activity. Jeffrey, how was the overall bond market on Friday? And I thought this was very interesting for you to think about. You see the yellow ones? The yellow ones are high yield. Junk bonds. Think AMC, right? Advances and declines, this is issues, number of issues, which is weird. It's not dollar value. Advances and declines are about the same on high yield. But investment grade, safe corporate bonds with investment grade ratings declines well ahead of advances. So I want you to think about that for a minute. People ran away from investment grade, but the high yield is already dog. So now let's take a look at Treasury and Agency. So it's interesting. So Fannie Mae's declined more. Federal Home Loan Bank actually looks like it advanced more, and Freddie Mac's declined more. I'm not sure what I'm learning there, other than maybe 52-week lows are outpacing 52-week highs. And there was another page I wanted to show you. Yeah, this is always interesting. So, number of issues, just on one nice clean page here. On Friday, all issues. 9,000 traded. Roughly speaking, 3,000 advanced, 6,000 declined. But in your highs and lows, 1,000 new lows, 40 new highs. So it's 25 to 1 low to highs. On the investment grades, it's 30 to 1 low to high. On the high yields, looks like it's about 20 something to 1. Convertibles had no new highs. So bonds were terrible on Friday. Just terrible on the corporate bonds. Run away, right? Just a terrible day. So I don't know where we're going to be today, but if our website search results are any interesting insight, they're looking for negative beta stocks. They're looking to bet against the market again. So it's 8:03. We're not going to talk for too much longer. You got 27 minutes till the market opens. Let's take a look at some of our canary in a coal mine indices. So one of them I call stonks. That's not what I call it, but I'm not going to say the bad word. Pre-market stonks are both red and green, which is interesting. It's a nice mix. People are betting both sides of the table here. If we sort by market cap, it's still pretty mixed. Still pretty mixed. Even by market cap. So, just as an example, Boeing is now a stonk for us. So interesting. God, I love Boeing as a company, as an American icon, as a defense and aerospace industry, as a tech industry, as a, Buzz Lightyear to infinity and beyond. To me, that's Boeing. But as a stock, it's a stonk, right? It's down today. People aren't betting randomly on everything. Let's take a look at the money managers. That's a true canary in a coal mine. They look good today. They're mixed, but looking good, right? That's interesting. So the market is not telling me that it's set in stone where it's headed. Let's look at trucking and transports. Oh, that's not good. Main Street. It's down. Although Landstar and Greenbuy are up, which is interesting. So there's certain bets on trucking. Let's look at cannabis. God, there's a heartbreak set of industries for you. Cannabis is not bad. Some of the risky stuff is up. But again, little mixed, right? So cannabis looking a little stronger than weaker. How about specialty retail, Jeff? The true Main Street. The true, consumer. Because we're not talking about going to Walmart and buying Staples. We're talking about, or going to Staples and buying Walmarts. I mean, going to Staples and buying things you need for business. This is like Chico's, right? This is paying $50 for a blouse. Well, it's mixed. Now, Carvana is a stonk, and that's way up because people are betting on Carvana. Something must have happened where people are covering shorts. Chips and semiconductors, the ultimate canary in a coal mine, mostly red. That tells us, yeah, we're probably going to open lower. Just so much interesting. You kind of have to have your own bellwethers. If you were a customer of ours, I'd be happy to show this to you every time you buy a run, but you make this up yourself. This isn't that hard. Just pick the stocks you like. So when we look at crypto and miners and we see Newmont is down, I personally like to I like it. I like looking at the miners. BHP, Rio Tinto, Vale, Freeport McMoran, Newmont Mining. It's mixed this morning. Cleveland Cliffs. Love the way they're managed. I'm not sure if I like the stock at this price, but love the way they're managed. All right, pre-market is mixed. So what I would say is, today people are picking stocks. They're not buying or selling the indices. Maybe there's less money going to work today. Maybe people are scared. I don't know. I think this whole China being down thing is not good for the market today. And so let's see if there's anything left to talk about. Maybe just a recap, right? So you've been listening. You saw that when we first started our discussion, right? The indices were up. Now the indices are down. Although the VIX is down, the US dollar is actually down from where we started this discussion. Silver's a little better. Copper's a little worse. You know, the market doesn't know what to do. Oh, crude oil went above 110. Oh my God, gasoline went up 2 cents. I hope my wife filled up the tank before she went to work, because after work, it's 2 cents more. Yeah, that kind of stuff, that's weird. Gasoline shouldn't be moving 2 cents in the morning. So what I would say is the market is probably going to be a little red today, at least at the open. The second thing we talked about is the riskiness, right? So variance of the indices are up. The third thing we talked about is our model has a little more edge. Our we call the smart volatility model has a little more edge today, and it's a little bit fewer stocks. And I don't know. The big guys are coming out with weird numbers, right? S&P 500 at 3,200, S&P 500 at 3,600. But it depends if we're going to hit a recession. That's up to you guys, whether you think we're going to hit a recession or not. So this is Jeffrey Cohen. I want to thank you very much for listening. If you found this video useful, drop a comment below. Ask a question. I love when you do that. I'll answer your questions in the YouTube comments. Or if you want to leave a tweet, you could tweet me. You could even DM me. That's fine. I like that. We're at Chicago_Quantum. And if you like the video, you really like it, we're not paid to make these videos, hit the subscribe button. That really helps us. Again, thanks very much. Good luck in the markets today. Take care.